Hello everyone, hi, welcome to the channel of Wall Street Mojo. Friends, today we are going to discuss a tutorial on cash flow from investing activity. We are going to learn some formulas and some of the top examples on the scene. So let's begin. At the very inception, cash flow from the investing activity, it provides information of the cash flow or cash inflow, and you can say cash outflow, related to the purchase and the sales of the assets, property, plants, equipments, loans made to the suppliers, or one receipt from the customers and the payment related to, very important, mergers and acquisition, or known as M&A. In a nutshell, we can say that the cash flow from the investing activity reports the purchase and sale of long-term investments and property in plants and equipment. So in this article, we are going to look at a couple of things. Let's begin from the initial portion. The first is cash flow from the investing activity as a part of what is investments. So cash flow from the investment includes all the transactions involving acquiring, selling long-term investments, property, plants, and equipment. These items are found in the non-current portion of balance sheet, non-current portion of balance sheet. So it includes purchase of the plant, property, equipments, which is your cash outflow. Then it includes a sale of again property, plant, and equipment, which is again your cash inflow. So this is your purchase, this is your sale. Then you have investment in JV, investment in joint venture and affiliates, that is your cash outflow. Payments in business that have been acquired, so I'll just write takeovers, that will be again your cash outflow. Then proceeds from the sale of asset, that will be your cash inflow. And finally, investment in marketable security, which would be your cash outflow. So it is always easier to understand when we create some questions and then answer them. So here are some of the few questions that when answered would help us to understand the topic in a much easier manner. The first and the foremost question is that what happens to the cash account of the company when they have purchased land? And the next question that comes into mind, what happens to the cash account of the company when it has been the land, when the sale of land happens? So when we see answer to the question number one, in the case one, the cash account would decrease. Okay, the cash account would decrease, and as the company would need to pay some cash for the land purchase, double entry system of accounting would lead to increase in the assets account. So in this case, the account under consideration is property, plant, equipment, right? The next is a sale of a land. So in this case, the cash account would increase as the company would get the cash for the land sold, and the double entry system of the accounting would lead to the decrease in the assets account. So in this case, the asset account under consideration is property, plant, and equipment. So cash flow accounting, cash flow from investment example, we'll be taking the basic one. Let's assume that there is Mr. X. I'll go to the next sheet. Let's assume that there is Mr. X. He starts a new business as planned, that at the end of the month, he'll prepare his financial statements like income statement, balance sheets, and cash flow statement. So in the first month, what happens is that there was no revenue in the first month and no such operating expense. Hence, the income statement will show that income statement will show us as zero. So in the cash flow from the investing activity, there will be no activity to, hence it will again remain zero. So the investing activity will be shown as zero. In the second month, let's say the company did some investments in the land and property, let's say during the month amounting to 1 lakh. This is a cash outflow, hence it should be negative, and in the cash flow from the investing activity. So you can say the cash flow from the investing activity over here is going to be 1 lakh. So let's calculate the cash flow from the investments. Let's calculate the cash flow investment when we have the balance sheet data. As you can see, this is a basic example. Balance sheet, non-current assets details are given, the total assets data is given, and so on and so forth with other details. So let's begin with our calculation. Over here, we'll assume that the gain on the sale of the land, let's assume that the gain on the sale of land is going to be 20,000. So let's calculate the cash flow from the investment. As we already know that the the cash flow from the investment in related to the non-current portion of the balance sheet. So there are two main items in the non-current assets. You can say the first one is land and property, and another one is plant and equipment, P&E. Got it. So the first one is a cash flow from the sale of sale of land. Now, when we talk about cash flow from the sale of land, decrease in the land, there'll be first will be decrease in the land, then gain from the sale of the assets. So from this data, as you can see, 80,000 less 70,000, and then you'll be adding any gain, if any, which was 20,000. Right, which we just discussed. Gain from the sale is 20,000. So that will be the cash flow from the sale of the land. The second is the cash outflow from the purchase of property, plant and equipment. So in that case, it's going to be quite, it's visible over here. 1,20,000, as you can see, minus 1,70,000. So that's going to be as simple. We know the amount. I'm just doing the calculation, 50,000. So cash flow from the investment formula, it goes something like this: cash flow from the sale of land and the sale and the cash out from the PPE, that is the property, plant and equipment. So cash flow from investment activity is going to be equal to 30,000. Over here there's some problem. 87. Okay, this should be 70,000. So it's going to be 30,000 less 50,000. That will give us negative 20,000. So the cash flow from the investment is an outflow of minus 20,000. Now we'll be discussing a cash flow from the investing activity as an example, which we are going to discuss of Apple. Now let's have a look at the few more sophisticated cash flow statement for the company listed in NYSE. Now this is basically the cash flow from the investment of JP Morgan and Chase. As you can see, the Apple cash flow from the investment outflow is close enough to $44,977 billion. I'm sorry. This is the template for Apple's case. The Apple cash flow activity of an outflow is 45,977. Apple is heavily investing in the purchase of the marketable securities. That is, the Apple purchased close enough to 142,428 billion worth of marketable securities in 2015. In addition, Apple generated the cash inflows by selling the marketable security cash inflows. Apple sold its marketable security, generate 90,536 billion in cash inflow. In addition, Apple invested the acquisition of the property, plant and equipment, which is quite visible over here. It's negative. It was 11,000, now it's 12,000. So 12, you can say that it is to the tune of $12.73 billion in 2015. Then we can take another example of Amazon. Now let's interpret the above cash flow from the investing activity and how indicative it is of the situation of the company. Some important points of Amazon's cash flow from the investing activity are as follow. Amazon has continuously investing in purchase of the property, plant and equipment. Okay, and it including softwares and web developments. Amazon's cash flow outflow for around this was $4,590 billion and 4,893, as you can see, billion in 2015 and 2014 respectively. So you should be mindful in that the expenses under this head can be of the great indication on where the company is heading to. The quality of the capex is to be determined by reading the management discussions and analysis, MDA, which will provide a great insight on where the company is planning to go for the next few years. So based on this, we can make a final conclusion that after discussing all the examples, investors earlier used to look only on the income statements and balance sheet for the clues about the situation of the company. However, over the years, investors have now also started looking at each one of the statements alongside the conjunctions of the cash flow statements. So this actually helps in getting the whole picture and also helps in taking much more calculated investment decisions. As we have also seen throughout the tutorial, that we are able to see the cash flow from the investing activity is really a great indicator about the core investing activity of the company.